All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. I get asked all the time about Vanguard index funds and ETFs, all right? And in this video, I'm going to go through the ETFs that I own personally. I encourage everybody out there to do their own homework, but certainly always trying to break down barriers of entry into the stock market for beginning investors, investors that know that it's the right thing to do to get some exposure in the market, but just don't know how to do it. All right, the Vanguard products, or really any ETF, can provide you the diversification and some dividend income that are so important, and all too often they're just overlooked. All right, and a lot of people want to make investing a lot more difficult than it needs to be. And hopefully me covering these ETFs for you guys, it'll let you know that this is really an easy, kind of a low stress. These products are really built for those folks out there that say, you know what, thanks for the single stock recommendations, but it's not for me. All right, I want something that I can dollar cost average over time, something that's going to grow wealth for me over time, something that's going to accumulate value within the account. I'm going to talk a little bit about some of those as I go through these rapid fire, but by understanding how it is I seek my exposure through ETFs may help you guys get a better understanding of what may potentially work for you guys, all right? Now, I don't set hard and fast rules on you have to invest this way and this is the only way that you need to invest. That's not the way you will ever succeed in the stock market. The key question to ask yourself is, how do I want to go about seeking my exposure to the stock market? And many of these products may actually fill that void and answer that very question for yourself. All right, so I'm going to go over portfolio one. I'm just going to run through these three ETFs very quick, very simple for you. I'm going to kind of give you an idea how much of a percentage of my total overall portfolio these ETFs hold, what type of share balance and what type of dollar amount. That'll help provide some answers for you guys that hit me up with this question all the time. Can I own a Vanguard product in any account out there, whether it be Merrill, Chuck Schwab, TD Ameritrade? I own mine in M1 Finance and Merrill. The answer is yes, you can, okay? So these products are available in most brokerage accounts. So let's kind of get right into it. First one is my favorite. It's a ticker symbol VTI. It's the Vanguard's Total Market Index. I own 2.04% of my total overall portfolio value. It's about $4,669 in that particular holding. Got just a little over 30 shares. Okay, so starting to build these. Now, let me set some ground rules in each of these. These are positions that I'm taking and will not be selling. Okay, these are positions that are starting positions for me in my portfolio. The idea being that when I generate some capital from other areas of the portfolio, that I can maybe pick up a few more shares and just dollar cost average these markets as they fluctuate over time, all right? But VTI, really one of those flagship ETFs. I'm going to be providing some links in the description below to the Vanguard's shopping mall. You guys can link over to that and find out any type of details that you want. Top 10 holdings, number of holdings within the fund, expenses associated, and so on and so forth. You can check those out for yourself, okay? The second one is the VYM. This is one of my favorites. It really supplements the VTI. There is some overlap between these two. I don't really care. At the end of the day, I want a diversified exposure to the stock market, and this is in my spouse's account. So I want diversified, broad-based exposure that's going to give me the best chance of getting that 7, 8, 9, 10% maybe in the stock market year in and year out, okay? I want to be able to absorb a downturn in the market, maybe do some opportunistic buying. But the VYM is the dividend payer, all right, and pays a nice dividend. Actually, a commonality between all these is that they do pay a dividend, and that's great, man. You're getting that dividend reinvestment. You're getting the dividends paid for you. You guys need to also understand the real key benefit to the Independent Investor Channel's message is that every one of these assets are contained within the self-directed Roth IRA account. So you're getting the tax protection on all these dividends that I'm talking to you about. It's tax protected from all the capital appreciation that you get from these assets. And it's about as low of an expense over an account because you're not having these profits lost through hidden fees within a self-directed account. You're in charge. The beauty of these products is you can put them in motion, let them work for you, and that's what they're doing while you're sleeping. They're working for you. They're working for you all the time. All right, those are benefits that a non-investor cannot enjoy. All right, so VYM, about 1.96% of the total overall portfolio value right now. Got just about $4,486 in the VYM, okay? And the final holding in that account to round out my broad-based diversified exposure within the portfolio is VBK. VBK is a small cap growth fund, okay, ETF type, own about 1.23% of the total overall portfolio value in VBK, about 15 shares we're looking at there, about $2,812. All right, so fairly small position relative to the total portfolio, but that's portfolio one. All right, now these funds are really built to house whether it be $5,000 or $50,000 or $500,000. You don't have to worry about finagling in and out of these accounts. These assets are meant to buy and hold from a passive perspective, and that meets a lot of people's criteria. A lot of people don't have time to research single stock, nor do they really have the interest in doing so. Okay, so those products right there can fit that bill for people who want low expense access to the stock market, and they want passive access to the market so they don't have to monitor it very often. These are products that you can invest in, hold, forget about, and look at them when you retire, okay? Now, Portfolio 2 has the flagship S&P 500 VOO, fairly small position, 10 shares in the VOO. Remember, these are just token starting positions. I do anticipate building these positions up over time, about 1.21% of the total overall portfolio, $2,766 in that particular VOO, happy to own it, diversified across the large cap, the stock market index, the most recognized actually as an indicator of the U.S. stock market, the S&P 500. You can kick over to Vanguard and check out VOO, which is the ticker symbol. VWO, a little bit more aggressive on the emerging market side. I take in a little bit higher expense. I believe this settles in at about 0.30, which typically is not in my wheelhouse to be accepting fees of such magnitude, but I really wanted to have some emerging market exposure, and I get that through the VWO. It's about 1.38% of the total overall portfolio value, okay? VWO, about $3,172, 75 shares and change with the VWO. VNQ, one of my favorites. This is a little over 2% of the total overall portfolio at 2.01. VNQ is the real estate ETF from Vanguard. Very exciting. I wanted to get my specialized ETF exposure to real estate. That way I don't have to buy single stocks per se in the real estate. I can just own the entire sector by owning the VNQ. Right now, about 50 shares, about $4,620 in the VNQ. I'm just stoked to own this, and we'll continue to grow that ETF as we look to build wealth within this respective portfolio. VBR is the brother of the VBK. That's the value small cap ETF from Vanguard. VBR is about 1.73 of the total overall portfolio value we're looking at. So VBR, we are looking at $3,964, about 30 shares of that particular ETF. Very simple, put it in there, gets me that small cap exposure on the value side of the house, okay? One has the growth, the other has the value. If you just want to buy them both, you can just buy the VB, okay? Which I do own in the other portfolio, okay? We'll talk about that at another time, okay? VPU, finally, to round out the specialty sector-specific ETFs that I own in portfolio number 2. VPU I've owned for a long time, just a little less than 1% of the total overall value at 0.93. percent there in VPU. Got about 15 shares of VPU, rounding out at about $2,137 of total value there. So about 275 shares in total represented there, covered over about $28,626 of diversified exposure between my two retirement accounts. Again, the real highlights, the tax protection and the wealth protection. Okay, this account does not incur fees. The only fees that come as a result of owning these assets is the expense ratio. All right, you can check those out for yourself. Most of them are very, very low. The flagship accounts are around 0.03, and then for something a little bit more specialized like the VWO, you're in at about 0.30, which is absolutely acceptable when you look at comparing it across the industry. And I will just mention I haven't owned these for very long, okay? I've generated about 1.4 free shares. Okay, so I do have some partial shares there that have actually already paid in each of these funds, and that's really start of the beauty of owning some of these ETFs, and is that you're starting that compounding growth, that dividend reinvestment, so that it can compound over time for you as you're looking to build and grow wealth going forward. Guys, thank you so much for tuning into this video. A lot of fun talking about Vanguard ETFs, man. It can really fit the bill for a lot of new investors out there. If you've got different products out there that you like or have had success with from Vanguard, leave them in the comments below. Don't forget to subscribe to the Independent Investor channel. Share the message with new investors out there that are looking for some introductory information in the stock market. Bring them on. Bring them on. We'll help anybody that wants to learn and wants to learn about how they can seek out exposure that is going to be right for you. That's the key, okay? My portfolio is not going to be what's right for you. What's going to be right for you is what you determine to be right for you. And I always advocate that the best judge of that very determination should in fact come from you. Thank you so much for tuning in, and good luck in your investment future.